I am Nicolas Crémieux, co-head of convertible bonds at Mirabeau Asset Management. In this talk, I will present you the 5 tailwinds we have identified to consider convertible bonds as a strategic investment in 2021 and in the future. The first factor is convexity. Convertibles enhance traditional equities because they can capture between 40 to 70% of their upside with half the volatility, but capture only 20 to 50% of their downside. Convertibles provide a healthy mix in growth, cyclical, and recovery mid-cap size companies, giving investors a varied exposure to equities at any time. The second factor is the pickup of merger and acquisition activity. We expect an increase in M&A transactions because COVID-19 has accelerated many trends, forcing companies to transform their operations to keep up with the pace of change. So we think it's important to focus on potential acquisition target companies whose convertible bonds have a ratchet clause, offering compensation to holders for the loss of value time if the underlying company is acquired. The third factor is the duration protection. Convertibles provide a degree of hedge against inflation because of their shorter duration and the embedded option to convert into the underlying equity, which usually gains value in times of rising interest rates. As a result, we believe that equities will be the main driver of convertible returns, and to a lesser extent, income following the expected tightening in convert credit spread. The fourth factor is that volatility is cheap. We see convertibles as a source of long-dated options that are attractively valued today relative to fair value. Such prices mean that investors would benefit from a rise in volatility, while financial markets transition from a liquidity to a growth-driven regime with higher volatility, a logical and healthy development as macro conditions normalize. The fifth and final factor is the strength of the primary market. We estimate that the 330 new issues across 2020 and 2021 represent 45% of the convertible market. We believe that these new opportunities make the asset class even more appealing for 2 reasons. Firstly, they give us more names to consider across a larger range of sectors. And secondly, they increase the proportion of convertible bonds that exhibit balanced profiles, which is the only category that provides convexity, an area we strongly focus on. We expect further new issuance in the convertibles market as companies prepare their balance sheet or invest for growth in the following years. In conclusion, these 5 tailwinds, convexity, pickup of M&A, duration protection, cheap volatility, and strength of the primary market will serve investors well in the potential scenarios unfolding in 2021. The hybrid characteristics of convertible bonds make them a compelling choice for strategic allocations that aim to pursue lower volatility equity exposure over multiple market cycles. Thank you for listening.